Hello and welcome to India Market Open. Good morning, Niraj.
Call it a good omen.
Good morning, Tamanna. Global cues are slightly negative this morning, but I think the big budget is behind us. Big leg of the earnings season is also behind us. I'm not sure what the cues this week are going to be.
Yeah, maybe the RBI policy for the week at large. But ahead of that, lots of things to digest today for sure.
Absolutely. A lot of numbers over the weekend. The big budget event is done, but all eyes now on whether MPC and Shaktikanta Das carries forward the baton that Finance Minister has handed to him. I'm going to get to the global cues in a sec, but just a quick update on what you will see in about 15 minutes from now. Remember, NDTV Profit had the first and exclusive interview with Finance Minister Nirmala Sitharaman, and we will be breaking down what the key points are and the key takeaways from that interview. Now, having said that, global cues would have seemed positive till about, say, a couple of hours ago when Jerome Powell did an interview with CBS's 60 Minutes and sort of dampened spirits, where he says that the idea of rate cuts, or the pace of rate cuts, will not be as fast as markets are expected. Now, having said that, let's tell you what happened, at least over the weekend on Wall Street. Friday's close was good for the markets, for the US markets. 13 out of 14 weeks, they have been on an upswing. Good numbers, especially from the tech pack, has done that for the key indices. The January jobs report is an important factor. It's come in hotter and way hotter than expected. 35,000 plus. Even your December numbers have been revised upwards sharply. So that's telling you this is an economy which is looking strong. Again, not a very positive cue if you're expecting interest rate cuts. That we saw that playing out in the yields as well, which are back above 4% and at 4.07% in fact. So there was a uptick over there. Now let's come to what Mr. Powell has said and why that has spooked markets, and you'll see that play out in Asia as well. So he said fewer cuts expected than market expectations. He's like, by March, we'll have a clearer picture. So reiterated some of the things he said in the press conference, but it has had somewhat of a dampening effect on Asia. And we'll just pull up Asian markets quickly before I hand it to Niraj for the trade setup. And you're seeing, apart from the Nikkei, Shanghai down 2%, but then, China has its own set of problems. So we have to factor in those as well. All in all, I think a mixed sort of a cue over there, Niraj. The market will maybe react more to negative news because all the positive news is priced in.
You could argue that. The other question is that does the market force the Fed's hand as opposed to what the Fed is saying? And we won't have March for sure, but can we have an earlier than the 4Q 2024 rate action? That is the key to be seen. But for our markets, the going was very good until the second half of Friday. And you saw that sharp selling after, actually not even second half, earlier than the second half, but you saw the sharp selling that came in for the markets in the second half. That kind of spoiled the party market-wide, except for PSUs, and what's happening in the PSU space is only to be seen, to be believed. But, if you just take a step back and look at let's say since December second week, if you will, and just look at the Nifty chart, you will see that the Nifty is wedged in this 800-point band. And lest 800 points sound a lot, it is a 3% band on the 22,000 mark. 3% the entire band. So this very, very narrow range that we've been in for almost 2 months now. So while we may think about what the market will do a given day, frankly, the market has done nothing in the last about 50 odd days, except for move in this band. And very likely that, most setups that I've read over the weekend speak about pretty much this. Nobody's a clearer answer. Stop losses around 21,100, 200, highs at about, 22,000, 22,100, or the latest life highs that we've done in Friday's session. So that's about it. The pocket to watchers, PSUs, of course, they almost seem to be in an unstoppable mode, and they're right in most. The oil upstream companies is one more space that you got to watch today. But PSUs, by and large, viewers, is the pocket to watch at because. Most experts are saying that the PSUs are rising even after they are selling them, and therefore maybe trailing the stop losses higher on some of the PSUs is probably the best way to do it. Look at that 3 months, 50% return for the Nifty PSE index. And even in Friday's session, guys, Samina, Tamanna, just the kind of gains that some of the PSUs made, despite the fact that the market came off, right? Look at everything from a Shipping Corporation of India to NBCC to SJVN to NHPC to BPCL. very strong price action, and the data will be up on your screen. Very strong price action, very strong volume-backed buying. BPCL itself had volumes which are about 3.5 times the 1 month mark for delivery. Essentially just the delivery. So serious delivery-based buying in PSUs.
And we've seen that through Jan. OMCs generally have been in a very sweet spot, to say the least, right? But I think one quick question, Niraj and Tamanna, and I think this is some data we picked up as well. The long-short ratio has actually increased from 22 to 32.5% on Friday. And this is as FPIs have actually liquidated short positions on Friday specifically and aggressively built some long positions in. So if there are any positive triggers we're watching out for, this one could be something that traders may take some heart from. But in terms of stocks, a whole bunch of them. I'll start with the biggest talking point all weekend has been Paytm. The stock again will be seeing activity from the word go in early trade. A couple of updates that have come in. Paytm this morning has clarified that its company and its related entities are not facing any investigation for money laundering from the ED. This all comes in amid RBI action against its banking arm. The company has also said categorically denies any investigation by the ED against Paytm, its associates, founder or CEO for money laundering. Remember, CAIT has advised traders to switch from Paytm to other payment apps. The RBI's action against Paytm payments was taken following reports of non-compliance and supervisory concerns. Brokerages all through Thursday to this morning continue to downgrade the stock. Update on the stock is that Morgan Stanley, in fact, Singapore, has actually picked up 0.79% stake at an average price of 487 on Friday in Paytm for a total worth of 247 crores. This was bought for an unknown client, an unknown FPI. Details, of course, could be asked by SEBI if they want to know who this client is for Morgan Stanley. Apart from that, the trading limit on Paytm has also been reduced from 20% to 10%. So a good possibility you may see some selling pressure on the counter, but the cap on Paytm now stands at 10% after a 40% decline the stock has seen over the last 2 days. Well, the other one you want to keep on your radar this morning is SBI. Numbers War, of course, saw a dip of 35%, so a big hit is what we've seen on the numbers. But when you look and do a deep dive into those earnings, they actually don't seem as disappointing. Couple of key takeaways. SBI has provided 7,100 crores towards a one-time increase in pension liabilities. Margins were also down due to repricing of deposits. But remember, the management has indicated that most of the repricing is now behind them. The bank is also looking to grow advances at the rate of 14 to 15% and deposits at 12 to 13%. They have a very healthy corporate loan book, the pipeline of which is about 4.6 trillion. Capital advocacy will not impact their growth, and this is what the management has indicated after its earnings were reported. They're also looking at fundraising through the 81 bonds over this quarter. A bull and bear case for the counter. SBI first up. Remember, their gross and net performing assets have fallen 2.42% from 3.14, and net non-performing assets are also down to 0.64 versus 0.77. Valuations are very compelling. It trades at less than 2 times book value and hasn't really performed in the last couple of months, if you've noticed. The bear case, of course, for SBI remains that there is an employee wage hike, which has now been revised to 17% from 14%. So that could again impact the next quarter earnings on SBI. But all in all, guys, you want to come to an SBI because while on the face of it looks disappointing, a deep dive indicates that actually it's a good quarter for SBI, or at least the outlook looks relatively promising.
Yeah, you said it all. The only thing is the standalone book, as you said, standalone bank at about 1.1 or 1.2 times 25 adjusted book. The only pickle, the fly in the ointment is that there has been significant long build-up in the last 20-odd sessions. I think if the data serves me right, longs added since Jan-Mid, the OI is up about 14%, and it's close to 1-year high levels, about 2 times above standard deviation. So there's a bit of a long position out there.
Already that.
Don't know if that kind of unravels a bit.
No, I just wanted to make a point on Paytm, and of course we'll come more closely on it. But whatever negativity was there on Friday has just gotten 10x worse over the weekend, because now you have reports of an ED investigation.
But they've categorically denied that this morning.
there seems no positive light right now. But we'll
the only thing is that the regulator has reduced the trading limit from 20 to 10%. So hopefully that will arrest the fall to some extent. But one quick stock before I hand it over to you, Tamanna, is Tata Motors. Remember, this has been such a talking point all of last week. The stock performance has been outstanding. It took over the market cap for Maruti. Now, this clearly retrospectively comes with good enough reason. Numbers have been phenomenal for Tata Motors. They've posted a very solid quarter. For what we've seen, they've recorded a 137% rise in profits for the quarter. Growth was driven by strong operating numbers. EBITDA for the quarter is up 59%. Margins have expanded 300 basis points. Brokerages, especially the likes of Macquarie, have actually upgraded the counter and raised the target price as well. A couple of other factors worth noting is that they have said that JLR may face some headwinds, but the numbers have been spectacular to say the least. India business again has seen a little bit of a growth. This may be something you want to watch out for as an investor. But in terms of other factors that they've talked about, they've very clearly also stated that they will reduce their debt. The debt leveraging is on track. Their cash level should be on point by the end of FY25. Debt should be below £1 billion. So largely speaking, great numbers. Every vertical of the business is doing well. The turnaround is underway. In fact, we will expect, or the management is pretty confident that from next quarter, the numbers will continue to actually improve going ahead. So there's no looking back or looking down for Tata Motors this morning.
If people were wondering why the stock has done so well, right, in 2023 as well, the best performing stock, and the guidance, Samina and Tamanna, EBIT margins above the guided range, the £2 billion free cash flow, they'll meet it. All boxes tick mark, to be honest.
The fourth quarter will be even better than the third quarter, so there's just really no stopping.
So it's interesting how auto is seeing a sort of a turnaround in mood from the numbers as well, and we'll be speaking to Shashank Srivastava later. But if Tata Motors is zooming, Interglobe Aviation is flying.
Yeah.
If you had to look at their quarter 3 numbers, I mean, it's I think the 4th or 5th consecutive quarter where you're seeing profits, but it's a beat on all counts. Your revenue up 30%, EBITDA up 40%, margins have increased from 25% to 28%, net profit has doubled to 2,998. Interesting note by Morgan Stanley, they've maintained an overweight, they've raised a price target to 4,145. So on all parameters, Indigo is, like Niraj said, ticking the boxes. An interesting pointer from Morgan Stanley where they're expecting Indigo to add a business class section as well, which deviates from the all economy seating strategy actually across the sector, but for Indigo as the market player as well. And it's interesting because even as you have now new entrants, Indigo is cementing its dominance in that sense. Their ASKMs, that's available seat kilometers growth, is expected at 6%, and potential capacity to grow in FY26 is also estimated at 25%. So that's one stock I'd keep an eye on. It's a very transportational theme, I must say, because Titagarh Rail Systems is the next on the list. Another beat on margins, net profits. It's a strong quarter led by the freight rail system that was up about 39, nearly 40%. But the passenger rail system segment has declined quite a bit to 35%, which is why perhaps your revenues are not as expectations. So your EBITDA, your margins are looking good, as are your net profits. Net profits are up quite significantly. Actually up about 130% if you look at it that way. The last one, though, is a disappointment on all fronts, and this is a sectoral push as well. If I'm talking about UPL, this is an overhang for the space. The agrochem company has seen a persistent weakness that continues in this quarter. Revenue down 28%. EBITDA is down very sharply by 86%. So you're at 416 crores. Now at EBITDA. Margins have shrunk dramatically, I must say, from 21.7% to 4.2%, and net loss of 1,600 odd crores versus a profit of 1,360 crores. So poor revenues across geographies. Falling agrochem prices is a problem. There's a clutch of reports on UPL, and Nuvama, for one, has reduced the price target to 486 from 718. It's disappointing results, persistent losses much below estimate. So this is going to be a tough one for UPL today and one to watch.
Yeah, just one addition to that, Tamanna, is this interesting note that Nirmal Bang note makes. And they say that the weak YTD results and the high net debt of about 31,000 crores now raises concerns on sustaining the investment grade rating for UPL. Given that Q4 also will be subdued, which will, according to their estimates, cap the FY24 EBITDA at about 4,000 crores as per their estimates. If that gets done that way, then it could result in the net debt EBITDA overshooting the cap required to maintain the investment grade. So now this becomes a moving piece for UPL, because this could be big for a company as large as UPL, etc., to actually miss that. I mean, they have said that the management is confident of doing everything going for this rating, because they'll plead to the rating agencies, etc., that the sector is under turmoil and all. But I think this becomes an important moving part for UPL. So watch out for that. And just before we move on to editor's cut, very quickly, we've highlighted the big ones. Now, the small ones to watch out for today. Divgi Talk Transfer. Not a great set of numbers. And why this is important? Because it's a very expensive stock. So revenue is down 1.5%, EBITDA down 29%. Margins, look at that, have cracked from 28.4 to 20.5%. That kind of tells you the story. So watch out for Divgi, or Divgi as it may be pronounced. So this one could correct in the session today. And some observations from US FDA. Last week, everybody was scratching their heads about why is Aurobindo correcting. Now you know the reason why. US FDA inspection of the Telangana unit closed with 9 inspections, and the companies temporarily stopped manufacturing on certain lines as well. So the stock is down about 6-7% in the last 3 days. Suffice to say, there could be more in the session today. And Jubilant Pharmanova is the other one, wherein 4 observations have been issued on the Roorkee unit of the company. So watch out for these 2 pharma names, in addition to Torrent Pharma, which of course had a fabulous set of numbers. So it could well be an interesting non-Nifty pharma morning. And lastly, some small cap results which came out very briefly. I'll run you to them before we get to editor's cut. So Orient Capital Q3 revenues doubled. PAT were up 2.5%, and CDSL, actually we don't have time, but CDSL is the other one. Q3 total income up 47%, PAT up 44%. Watch out for these stocks as well in the session today. Guys, anything else before we go off to the FM's takeaways?
I think a quick update on Zee Sony. That could be an important one to watch out for. So again, disappointing news on Zee. So we will talk about that as we'll have Sajid at some point join in, but could be another negative sort of news flow.
The last bit was
has been rejected.
Advantage Zee, disadvantage Sony. Sony's plea got rejected.
So it's actually a good thing for Zee. Zee, though, is in the FNO ban. You want to keep that in mind as well. But the stock will remain on our radar this morning too. But Niraj, back to you.
No, and in fact, from me, it's back to rather to Alex, because it's time for the editor's cut. And Alex, we are kind of cementing upon something that we did very well in Friday's session, which is get the finance minister's interview first up across any private network in the country.
Absolutely, Niraj. You heard her first on this channel and on this platform, and the finance minister spoke exclusively to NDTV Network's editor-in-chief Sanjay Pugalia, and in that chat she underlined the reason why her government, her administration, chose to be prudent and pragmatic rather than populist in the interim budget just months before the general elections. We're going to break down some of those big statements and talk about the implications for companies and in extension, therefore, to the markets. Joining us on this editor's cut, we've got Sanjay Pugalia and we've also got Niraj Shah. Sanjay, the first thing that stood out to me, of course, was the statement on confidence, and I think that was your question to her as well, because she's chosen a fiscal glide path that a lot of people did not expect. How significant is that statement on confidence heading into the general election?
Yeah, every engine of economy, the way it is firing and looking at 7% GDP, I think the government is very confident of achieving that target without any fiscal slippages. And in any way, we know from Gujarat days that Mr. Modi is a stickler of fiscal discipline. So that is what is reflected in this budget. Before elections, one expects to splurge a bit more, spend a bit more money on populist schemes. This government has done nothing of such sort. So it is a good sign that Indian economy will not be growing on steroid, but on organic strength.
The statement that was made on capital expenditure is quite significant as well, Sanjay. What you asked was whether or not the government is not spending enough. That, I think, the answer to that was quite interesting.
Yeah, actually, I think they are so confident about elections that election was not in their mind when they were writing this interim budget speech and planning for this budget speech. Soon after the election, the indication by Finance Minister was very clearly that if there is a requirement, funds will not be an issue and we can increase the capex. She, of course, justified that 30% and 35% increase in last 2 years was on a narrow base. So 11% is not a small number. I think it is a small number, the kind of requirement our growth targets have. We need a little more aggressive capex, especially on public expenditure, especially focused on infrastructure. But the indication by Finance Minister was that in the final budget in July, we may see a hike.
Mr. Pugalia, just Niraj here. Good morning. Just one question. In some sense, did you get a feel that she also referred to the absorption capacity of the country or the states in particular in order to absorb the capex? That, you know, budget mein numbers rakhna ek baat hai, but never mind a tall number. They are not hitting the mark this year as well because the absorption of the states isn't quite as much as people would like to believe.
You are absolutely right. And that is the pragmatism. Rather than throwing big numbers at us, Finance Minister clarified this, that at state level, execution level, at capacity level, how much absorption can happen in a given period of time. And that is why their realistic calculations suggest that this money is enough. In any case, if there are more projects coming in and that they have to go for, they will be very happy to support that. That is the general mood in Delhi.
I wanted to ask on divestment, in fact.
That's what I also want to ask. But
please go
Alex,
ahead.
okay, fine. Okay, the other question that came out seems to be that every year, मुझे पता है कि हम सब लोग divestment को number को लेके, you know, we used to focus के what is the number coming or is it missing, getting missed, etc. क्या आपको ये लगा in your conversation that the FM was trying to indicate that, you know, don't be obsessed with a particular number because there may not be a particular number now every given year because we'll use divestment as and when we believe the timing is right, not because the budget math requires a number from divestment.
Exactly. वो divestment की funding से budget को बिल्कुल अब delink कर चुके हैं. और ये थोड़ा सा मुझे लगता है नीरज की एक हम लोगों का पुराना mindset है कि एक number चाहिए, budget speech में चाहिए और वो कमिटमेंट बता देंगे तो हम मान लेंगे कि डाइवेस्टमेंट हो जाएगा. ऐसा पास्ट ईयर्स में हुआ भी नहीं है. इसीलिए मुझे लगता है ये रियलिस्टिक अप्रोच को एक्सप्लेन करने की कोशिश कर रही थी फाइनेंस मिनिस्टर जब वो कह रही थी कि पब्लिक एंटरप्राइजेस के लिए 21 में जो फ्रेमवर्क बना था उसमें आइडिया ये था कि कंपनीज को पहले ठीक किया जाए, मार्केट पर्सपेक्टिव से ठीक किया जाए, न सिर्फ इंटरनल प्रोसेसेस ठीक हो, मार्केट को वो वैल्यूएशन पसंद आनी चाहिए, वो कॉम्पिटेंस पसंद आना चाहिए और उसके बाद हम हमेशा देख सकते हैं कि हमको सिर्फ पैसे डिविडेंड से उठाने हैं या एक्चुअली कुछ सेल भी कर लेना है. तो बहुत गार्डेड थी वो, लेकिन उसमें मुझे ये समझ में आता है कि जब जरूरत पड़ेगी तो इनके पास बहुत सारे पीएसयूज ऐसे हैं जिसका पार्शियल या फुल डिसइन्वेस्टमेंट ये सोच सकते हैं गोइंग फॉरवर्ड, लेकिन उस पर ये लोग कॉशियस हैं और उनको लगता है कि ये काम ऐसा है कि जिसको जब बहुत बड़े किसी प्लेटफॉर्म पे किसी इवेंट पे हम बात कर रहे हैं तो डिसइन्वेस्टमेंट की डिबेट को ला करके उसको फोकस से डिस्ट्रैक्ट कर दें, क्योंकि इनका फोकस 2047 है, इनका फोकस अगला इलेक्शन है, इनका फोकस 7% जीडीपी है और उसमें फंडिंग कैसे होगी ये एक इनको लगता है कि टेक्निकल बातचीत है, उस पर अभी क्यों जाएं. तो मेरा ये मानना है कि डिसइन्वेस्टमेंट का टारगेट हम लोगों का पुराना अप्रोच है इस सरकार की डिसीजन मेकिंग को समझने के लिए. जरूरत पड़ने पर ये लोग डिसइन्वेस्टमेंट करेंगे ऐसा मुझे लगता है और वो नंबर कमिट नहीं करना चाहते ताकि उनके हाथ में फ्लेक्सिबिलिटी रहे.
That is one thing, sir. The flexibility is one thing, but the other thing, Sanjay, and what she alluded to is the requirement to fix certain internal processes with PSUs and the fact that in certain situations the market is not valuing these companies how they should be valued. She spoke about LIC when she gave the example and she said she's fixed certain issues and that is reflected in the price. The fact that it is now crossed its issue price once again seems to suggest that some of those processes that were fixed have now been recognized by the market. But what was the aspect that she was talking about with regard to the valuations of the other PSU companies?
Yeah, of course, she wouldn't go in the details of specific sector or companies, but government, it seems, what she was trying to suggest is that it is very keen that every PSU should command a great valuation. To do that, a lot of background work has to be done. So market likes, international investors like, and then they can choose their own time when to go for this investment.
Last thing that I wanted to raise is a very short answer that she gave you on the PPP side. And it's interesting that she's saying, "Main sujhav le lungi," you know, in that, and I'm struggling with the Hindi. You can explain it better. But what was the point that you were making?
Actually, क्या है कि ये इंफ्रास्ट्रक्चर का जो काम है इंडिया में जिस तेजी से होना चाहिए वो गवर्नमेंट अकेले कर रही है, कॉन्फिडेंस बना दिया है, इंटरनेशनल कम्युनिटी को भी पसंद आ रहा है, लेकिन इंडिया के जो कॉर्पोरेट्स हैं वो कैश फाइल पे बैठे हुए हैं, उनको ये कॉन्फिडेंस नहीं हो रहा कि वो भी इस काम में हाथ लगाएं, स्पेशली इंफ्रास्ट्रक्चर के स्पेस में। उसका जो सबसे बड़ा रोड ब्लॉक है वो है जो प्राइवेट पब्लिक पार्टनरशिप के डॉक्यूमेंटेशन है, जो कॉन्ट्रैक्ट है, जो लीगल ऑब्लिगेशंस हैं, वो इतने कॉम्प्लेक्स है कि वो बड़ा डिटरेंट है। ये बात पुरानी है, इस पर करीब करीब 100 लोगों में एग्रीमेंट भी है। तो विदाउट कमिटिंग, व्हाट फाइनेंस मिनिस्टर very generously indicated that, yeah, I like your suggestion, I take your suggestion, and this is an area where some work has to be done. ये उनके कहने का मतलब था। तो मैं समझता हूं कि अब इंफ्रास्ट्रक्चर को जो बूस्ट देने की जरूरत है, क्योंकि वो बहुत तेजी से जॉब क्रिएट करता है, और जॉब क्रिएशन जैसा फाइनेंस मिनिस्टर ने खुद ही कहा कि प्राइम मिनिस्टर मोदी के लिए बड़ा इंपॉर्टेंट होता है कि कोई भी प्रोजेक्ट आप कर रहे हैं तो उसमें जॉब कितने क्रिएट होंगे। अगर ये भी फिल्टर है तो इंफ्रास्ट्रक्चर तो सबसे इंपॉर्टेंट सेक्टर है। टूरिज्म और सोलर एनर्जी के जो नए प्रोजेक्ट आ रहे हैं उसका भी जिक्र जब उन्होंने किया तो आप मान के चलिए कि जॉब क्रिएशन उसके पीछे एक बड़ा फिल्टर है। पीपीपी में मुझे लगता है कि प्राइवेट सेक्टर को अट्रैक्ट करने के लिए चेंजेस की जरूरत है, और विदाउट गिविंग एनी कमिटल रिप्लाई, फाइनेंस मिनिस्टर वाज वेरी रिसेप्टिव to this suggestion coming from all stakeholders that this needs to be fixed.
Okay, fair point. There was also an interesting statement that was made on the housing program, or the projected or the proposed housing program. Let's listen to what she had to say in that interview.
हाउसिंग का विषय पीएम आवास, ग्रामीण वगैरह हो रही है, वो गरीब के लिए। इससे बढ़कर के एक 45 लाख का अफोर्डेबल हाउसिंग स्कीम भी है, उसमें इंटरेस्ट सबवेंशन भी मिलता है, टैक्स का छूट भी मिलता है। मगर इन दोनों के बीच में रेंटल हाउस में रहने वाले, रेगुलर नहीं हुआ ऐसे कॉलोनी में रहने वाले, या चौल जैसे मुंबई में रहने वाले, वो गरीब के हिसाब किताब में नहीं आता, 45 लाख के घर में नहीं आता। उनके लिए क्या? इसीलिए माननीय प्रधानमंत्री जी रिपब्लिक डे के दिन रेड फोर्ट के परिसर से यही 4 वर्गों का वर्णन भी किए कि आप किराए वाले मकान में रह रही हो, या छौल में रह रही हो, या इरेगुलर कॉलोनीज में रह रही हो।
So that was just an inkling of what perhaps the government is planning. No key details yet. And that's interesting, right? Sanjay, she's not talked about key details, and there's just a couple of months to the elections. Is it possible that something is going to be launched in the interim?
That will be very difficult to guess, but she mentioned about PM's speech. She gave details that shows how they are looking at the problem. And the articulation suggests that how much homework might have already gone behind planning this. So I am definitely expecting the details of it to come out soon. And it is clearly targeted at migrating population of India to big urban centers and the challenges of housing and rent and land. And it is very clear that government is going to attack this from all corners. Exact timing, I won't be able to predict. But I think this is next big agenda after Pradhan Mantri Awas Yojana at bottom of pyramid. This is the next level where government will focus, because this is the population which is meaningfully busy in Indian economic activities.
Absolutely. Sanjay, thanks so much for breaking all of that down for us and joining us on the Editor's Cut this morning. We have to slip into a very, very quick break, but there's a conversation with Maruti Suzuki on the other side that you should watch out for, so do stay tuned.
Welcome back. You're watching India Market Open. A quick look at the implied open, and we seem like we might have a bit of a weak start today, all things considered. Not massively in the red, but yes, maybe a muted start. Meanwhile, focus on big numbers that have come over the weekend and how they'll react. One sector and one stock that's definitely in focus: public sector banks, and among them SBI. Numbers were out over the weekend, and on the face of it, maybe a bit of pressure. You've had a dip in net profit at about 35%. But in conversation with NDTV Profit, SBI CEO Dinesh Kumar Khara says 75% of capex comes from the private sector. He focuses on that aspect. He also says that the company has clear visibility on SBI's pipeline. Listen in.
We are having a very clear visibility in terms of the pipeline which we have, and that is nothing but a reflection of the confidence of the private sector players, and which is of course fueled by the initiatives taken by Government of India in terms of supporting the infrastructure. We have seen it in the past, and now we have got a situation where our pipeline stands at about 4.6 trillion Indian rupees. And I would say that much of it, almost about 75% of this pipeline, is coming from the private sector, and the remaining 25% is coming from the public sector. But yes, of course, it's a huge multiplier. It has got a huge multiplier effect. And that is something which I've already started seeing when we see our SME growth at about 19%. I would say that is a reflection of the kind of multiplier effect which is seen of such kind of investment.
All right, Mimamsa is joining us with what the brokerage's views are on SBI's earning. Mimamsa, this one-time hit in terms of salaries, pensions, etc. seems to have been digested pretty well in terms of house views, isn't it?
Right, Tamanna, so this one-time provision which is related to pensions, that has hit SBI's net profit by 35% year on year. Now, what brokerages are saying that this elevated provision cost and the net interest margin compression is going to impact the earnings outlook for FY24, and a lot of brokerages have cut down their estimates on that, but they have also maintained the buy rating on the stock. Now, with one-time exceptional item, the return on assets have come down to 0.62%, which is sharply lower than Q2. The net interest income also grew by mere 4% year on year, which led to a 7 basis point compression in net interest margin as well. So now this is because the SBI's cost of deposits had risen, but the yield on advances remained almost flat during the reporting quarter. So all in all, deposit repricing is a concern for SBI at this point of time, and that has led to the margin compression in SBI, which stands true for all banks across the system. If we talk about deposit growth in particular, Bernstein has pointed out that even though YOY growth in deposits was in line with system deposit growth, but the sequential rise in deposits was only 1.6%, which is lower than the system deposit growth and the top private banks as well. If we talk about slippages as well, the management said that there was one SME account that led to higher slippage on a sequential basis, and staff costs are expected to remain elevated in Q4 due to provisions of rupees 5,400 crore in the coming quarters. This is why brokerages have trimmed their earnings forecast. One interesting bit in this quarter, Tamanna, was that SBI is open to raising capital in the coming quarters. On net basis, however, the bank is capital adequate, as the management says, but they are open to raising growth capital if the loan growth is going to exceed the return on earnings growth. So that will be a key thing to watch out for as to when SBI is going to raise capital, if they are going to do that.
Thank you for that. That is SBI. The stock will be one you want to watch out for as we open up today's trade. Well, we also have Maruti that is going to be in focus. The stock will be expected to see a pretty solid opening on back of another exceptional month of sales. Record sales, in fact, for Maruti in the month of Jan. Shashank Srivastava, Senior Executive Officer of Marketing and Sales at Maruti, joins in. Shashank, thank you very much for joining us, Mr. Srivastava. Set the tone for us how demand trends are panning out. You've recorded once again one of your best months ever in terms of record sales.
Yeah, so I think in January, much of the wholesale numbers that you are referring to went into the filling up of the inventory pipeline. Remember, this happens every year because in the end of December, OEMs and the channel partners, they try to keep the inventory at a minimum. That's why you see high retails in December and low wholesale. And the reverse happens in January. And of course, there was an increase in prices midway through January, which also pushed up the wholesale in the first half. And I think overall, the booking and the inquiry parameters remain similar levels. And that's what resulted in a record wholesale of 395,000 in the industry. But the retail, of course, was a little lower than this, about 309,000. As a result, inventories in the network has gone up again to around 20 days. That has been the situation in January.
Glad you talked about inventories because I wanted to get a quick check from you on what inventories are looking like and, your discounts in the month of Jan. How much was it, and are you also planning to extend these discounts to liquidate that inventory build-up that we've seen going into next month, or going into this month rather?
No, so actually the discount levels in the month of December are usually the highest, and that's what has happened. January, the discount levels actually were lower because there was no inventory, and as the inventory built up, it's still 20 days only, by the way, which is is below the 30 days normal that you see in the industry. So the current estimates in the industry is around 263,000 is the inventory, against the normal 340, 350,000. So there's no really need for a higher discount in the month of January. But we'll have to see how actually the underlying demand moves from here, because now that the inventory is going up, so we will actually see the liquidation basis the actual demand patterns.
Right. Also, Mr. Srivastava, small and mini cars, have been struggling for the last couple of months now. Any update on that? Are you seeing an improvement there? When can we expect a turnaround for small and mini cars?
Yes, sir. For the small and mini cars, actually, there has been a downward trend, as you rightly point out, since the last 3 years. And at their peak, there was the small cars were selling around 15 lakh 60,000. That was in 17-18, but this year expected only about 12 lakhs. But I think in the premium hatches, you do see a little bit of growth at this time. Although the entry-level hatches still show a downward trend, they are now about 28-29% of the market against 45% that they were 3 years back. Last year, they were about 33-34%. So there is a shortfall, and largely because of the affordability factor coming down, which means the price is going up faster than the income levels for the customers in this segment. But some bit of economics shows that maybe we won't see a quick turnaround in the very near future. Maybe sometime in 2026, second half is what we expect to turn around in this segment.
Do you feel like sales in the small and mini car segment have now bottomed out at these levels, Mr. Srivastava? We could further see a decline before a turnaround kicks in.
Yeah, so I think they will be the projection for 24-25 financial year is flattish. And it will be expected to be remaining around that 12 lakh mark, and then maybe take a turn upwards going forward in 2026.
While that segment continues to be a bit of a pain point, with the SUV business, you've consistently been gaining market share. Sales also stand at record levels. Can you give me a sense of demand trends there over the next couple of months?
Yeah, so in the last few months, actually, the SUV sales have been going up. And also, if you see the last few years, they've been going up. So they were just around that 32% mark 3 years back. Last year, they were at 43% of the industry. And this year, they've crossed the 50% mark. And in January was the first time that on a cumulative basis, in the financial year, that the 50% mark was breached by the SUVs. SUVs, by the way, if you look at the calendar year, sold more than 20 lakh, which is 2 million cars, SUVs. That's very positive, and I think that trend will continue for some time. Our projection for this financial year is that we should end the year with about 52-53% SUVs, and going forward might go up to about 55-56 before they hit that plateau and then level off.
Also, exports, those numbers are also phenomenal, at least in terms of what we saw for the month of Jan. That pace could continue going ahead, the kind of buoyancy we've seen with exports for Maruti. Sustainable at these levels, Mr. Srivastava?
Yes, definitely. I think if you look at the last 3 years, Maruti Suzuki has been exporting more than 40% of the total export of passenger vehicles from our country. The last year, we exported about 259,000 vehicles. This year, we should cross that number. And next year, in 2024-25, we should be even higher. By the way, by April to January figures, 227,000 is the export against 210,000 of last year. So we are showing that growth of about 8% over last year. I think this growth, the projection for next year also is that the growth will continue.
Mr. Srivastava, a couple of things. New launches, I mean, I know your Maruti pushes for at least 3 to 4 new launches every year. This year, I believe the number is much higher. And also bring us up to date with what's happening on the EV launch. I know the market is very excitedly awaiting the launch, and you've also gone on record to say that you would be at 15% market share for EVs by FY31. So update on model launches across the board, and an update on EV plans as well, and where do they stand? What sort of timeline can we anticipate?
Yeah, so the specifics of the model launches, maybe I am not able to specify here. They are forward-looking and therefore market-moving. However, as you rightly pointed out, I must reiterate the fact that Maruti Suzuki has always been very, very positive as far as the introduction of new models is concerned. Even last year, we introduced the Vitara and the Jimny, the Invicto, the Fronx, and they have all done well. And as you rightly pointed out, we doubled our SUV market share. We became the number one SUV manufacturer for H1 of this financial year. So I think we will continue the trend of introducing new and upgraded models even in this year. Specifics is difficult for me to give here. For the EV, yes, we will be introducing our first vehicle, the first EV in this financial year. We will also be exporting it to other countries like Europe. And also remember that this EV, we are currently in the process of making detailed plans as regarding the charging infrastructure, which is so important for customer convenience. Also, Suzuki, as you know, has invested more than 10,000 crores in battery and battery-related components for EV, so that we can be very competitive with the localization levels that would certainly bring. As regards to your comment on the 15% market share, what we had said was that by 2030, on the powertrain within our sales, 15% will be EVs. Of course, our market share we expect to be much higher starting next year itself.
That is very, very exciting. Just a quick word, Mr. Srivastava, I know you and me both are out of time, but realizations, are these higher realizations sustainable going ahead? And also this pace of growth, we've seen you post record monthly sales month on month in the last quarter. This sort of pace is expected to continue to remain going into the next couple of quarters or in calendar year 24?
Yes, so I think if you look at 23-24, the projections for domestic market for India is about 42 lakhs, which is 4.2 million. And going forward, there is a growth expected because the economy is growing and auto industry growth is very closely related to the overall economic growth. However, at this high levels, we believe that there would be the growth, positive growth will be muted. So the growth will be there, but muted. And therefore, if your question is whether the absolute volumes will continue, certainly that's what the projection is. However, the growth pattern will be the same, maybe difficult at this high levels to sustain the very high level of growth. And the projections are that they would be in single digits for next year.
Right. Thank you very much, Mr. Srivastava. Great talking to you this morning. Maruti will be one stock that the markets will be excited about, and the word get-go in early trade. But apart from that, you've also got Paytm that the markets may not be too excited about this morning again, Tamanna.
Yes, we're going to get to our coverage on Paytm, but very quickly, how exciting is auto getting? And a newspaper report this morning saying Hyundai's India unit is going to list by Diwali. So you have Tata zooming ahead, you have Maruti looking strong, and then you might have Hyundai listing as well.
It's very good because the passenger car vehicle market is now represented well and truly in the indices.
Yes. So exciting times. Not so exciting times for Paytm. If Friday evening looked dismal, by Monday morning the news has gotten even worse. First, I just want to talk for a second about the NDTV profit exclusive that my colleague Vishwanath Nair broke post-market hours on Friday on some of the reasons and the inside story which could have led to RBI's action on Paytm. It was found about 1,000 accounts on Paytm were linked to just a single PAN card. So that has raised more concerns. There was a news wire report that there's an ED investigation on, and Morgan Stanley's Asia affiliate bought 0.8% stake in Paytm. They bought 50 lakh shares amounting to 244 crores. Now, what does all of this mean when Paytm opens this morning? It's already lost 40% of its value. Pranav Gundlapalle, a senior research analyst at Bernstein, joins us this morning. Pranav, very good morning to you. Let me start with your opening comments on all things Paytm. Fair to say that whatever silver lining or light at the end of the tunnel there seemed to be is dimming very fast as far as Paytm is concerned.
I think it's a big blow for them in terms of losing an associate company, and also brings them on par with how most of their peers are structured in this sort of a platform, payment platform business. Right? So I think that edge that they had is definitely gone. I think the question now is twofold. One is Is this the end of regulatory troubles, or there's more trouble ahead? I think that becomes a bigger question because one discrepancy then leads to questions on if there are more to come. And the second is if there is a reputational risk which will have rub-off effect on the other parts of their business as well. Remember, the payments bank is only responsible for a small part of the business. So therefore, if it's just limited to that particular business, it's probably not that material in terms of numbers. But the questions of future trouble from regulations and rub-off effect in terms of reputational risk are the bigger ones to be worried about at this stage.
So talking about those two factors, Pranav, and you're right, just the payments bank, if the contagion, so to say, was limited to just the payments bank business, it would be a different story. But for example, you have a traders association, and we'll be speaking with them later on the show, asking all brick and mortar retailers in their association, which is fairly large volumes and large numbers, saying please go off Paytm. For your own safety. So is it likely that things like that will snowball?
I think that's the risk. I think that's the reputational risk. Two things here. I think one is for a number of merchants, I think the underlying bank account has not been so much with Paytm Payments Bank. Right? So I think irrespective of whether one was using PhonePe or Paytm or any of the competitors or even a bank app, I think the underlying bank account remains with some of the large or the public or the private sector banks. So I think from a safety of the account or the of their cash and their value, I think that part is largely taken care of. I think there'll be a very small percent who actually hold meaningful balances in payments bank account, which is evident from the total balances that they've managed to capture. So then the second thing becomes, okay, if there is going to be a change from Paytm to another competitor, I think there is still an operational change involved. So if you think about Soundbox or some of the QR codes, etc., and the change would be similar whether Paytm tries to switch them onto a different bank account in case they were with Paytm Payments Bank, or if a competitor wants to come in and put in a different QR code. So I think the operational change involved isn't going to be too different. So it's not like somebody just switches to an alternative without any effort. Whereas for Paytm, it has to be an extra effort to keep the party going. Right. So I think that does leave us being a bit more doubtful on the level of impact that will happen, or the attrition that might happen from all these events.
Last question, Pranav, and very quickly. So any take on this Morgan Stanley affiliate buying stake, and any advice or any outlook on the stock price right now?
See, I think it's, if you, like I said earlier, if you assume it's a payments bank only thing, I think then the reaction seems overdone. And therefore, the decision to buy or sell will eventually rest on one's call on whether this is a one-off regulatory issue or if this is a sign of more trouble ahead. I think depending on where you fall on that assumption, it would be a compelling buy or sell, right? So on either side, you see a significant room for movement.
Thank you so much, Pranav, for joining us this morning. Expect another rocky day for Paytm, Niraj.
Yeah, most certainly. And in fact, but Paytm is not all. There is so much which could have a rocky day. UPL could be right up there and more. Let's talk about the trade with Sameet Chavan, research head of technical and derivatives at Angel Broking on the fundamentals. Parthiv Shah, director at Tracom Stockbrokers, joins in as well. Sameet, good having you. Parthiv, it's been a while, but great having you on the show. We'll make it quick because I know there's paucity of time. Sameet, to you first. What's the quick outlook on the index this morning, either the Nifty or the Bank Nifty?
Good morning, Niraj. As far as our index outlook is concerned, we are not too upbeat on the market as of now, at least at the higher levels. So one has to take a cautious approach going ahead. So around the resistance levels, one has to lighten up the position, or even an aggressive trader can take a punt by going short at higher levels. And, the weakest link remains to be, banking space. So Bank Nifty, which has been struggling to surpass 47,000. So on Friday also we saw, a sharp dip from the levels of 47,000. So the weakest link remains to be the financial space, and we would be keeping a close eye on this space. So 45,500 is the important level to watch out for Bank Nifty. If that, important level gets breached, which we expect to happen. then probably we are heading towards 45,000 and 44,800, and this will certainly, lead Nifty towards again 21,650, 21,600.
Okay, a bit of a mandi, as they say. Thanks, Sameet, for that. Parthiv, a clutch of results. I'll jump straight to that because there's just so much to talk about. Maybe you can give a brief view on the market, but quickly, there are some 3 or 4 large numbers that have come out over the weekend. There is Tata Motors, there is SBI, there is Interglobe Aviation, and there is UPL. So I'm sticking to the top 4 by size. Which one stood out the most for you, Parthiv?
See, absolutely. Good morning, Niraj.
Very good
Tata
morning.
And Interglobe Aviation. Firstly, on Tata Motors, I think this is a company which is right now firing on all cylinders. Historically, we used to witness in Tata Motors that if the JLR business was doing steady, I think the Indian business was bleeding. But now is a case where I think the JLR business is at a fantastic momentum. The order book is extremely strong. All the cost-cutting measures that the CFO has been talking about since last many quarters is now percolating into very healthy margin sets, and the premiumization theme there is really paying out. Not only that, the amount of cash flow they're talking of and the amount of debt they're talking of repaying, I think that gives a huge momentum to this business. The Indian business, I think, look at the fantastic pipeline in the passenger vehicle segment. I think out of nowhere, I think they are at a very healthy market share. And in terms of margins also, they've scaled up very well. The pipeline going ahead is looking good. The way they're revamping the models. And now we also have the EV business, which has already been monetized. They're sitting on some cash there. So they have a good pipeline there as well. The CV business, I think I would say that it's kind of steady, not growing in terms of very good volumes. But I think Tata Motors is looking fantastic because in terms of forward valuations, it's just at around 13, 14 times, which I believe is still cheap here. There is a 20-25% upside in Tata Motors. Talking about Interglobe Aviation, I think everything's good. In terms of the cost, I think they are one of the lowest. The yields at 2% was one of the best in the industry. Only concern being for FY25 is the 20% fleet that has been grounded. Because when that fleet is grounded, it adds to additional cost without adding any additional revenue. That's a concern for Interglobe Aviation. No doubt today there'll be a pop-up, it seems, but I think that is something of a concern. They are working with players like Qatar and other players to have their fleet kind of lease sort of a model, but that is the only concern. Talking about SBI, I believe it's a good set. They've grown above the industry average despite having such a huge book. Again, the concern being the contraction in the NIMs at 9 basis points. One was expecting at 4 to 5 basis points, and some of the liabilities in terms of the pension and one-off accounts. But otherwise, I believe on any declines, I think SBI at 1.2 times forward price to book multiple is looking very compelling.
Very quickly, Parthiv, view on UPL. I know Niraj asked you about UPL in a pack of 4 and you picked the good ones, Indigo and Tamo. But what about UPL? Is the worst cycle in the cycle over, or is there more pain to come?
Morning, Tamanna. I think disastrous set. In terms of EBITDA, decline of 30%. You see 5% decline in volume. And in terms of pricing, it was a 24% decline. I think we talk of all destocking, everything impacting the North American business, the Brazilian business, South American business. But look at the India business also. I think the India crop protection business, a degrowth of 34% in terms of the EBITDA. I really am scared about these numbers, and I don't think so. The destocking problem is over yet. So our sense is, I think these are disastrous set of numbers, and probably you are looking at a decline of at least 15 to 20% of kind of derating in this particular company.
Wow, that's a very strong statement there, and understandably looking at UPL's numbers. Parthiv, thank you for that. Sameet, please stay with us. We're taking a very short break. We're going to be back with the pre-open rates and more. Stay tuned.
back. You're watching India Market Open. It's expected to be a little bit of a down day for the street. Implied Nifty indicating to cap down for the street this morning. But we have with us a very special guest joining in. Samir Arora, founder and fund manager at Helios Capital, joins in. Hi, Samir. Good evening. I believe you're joining us from the US. It's pretty late up there. This is Samina at NDTV Profit. Samir, let's get down to talking about the big event that's behind us. Historically, the budget and the market relationship has never lasted beyond a week. This time around, I think it seems even shorter, given that it's the interim budget. All eyes on the election, which seems to be pretty much a given from what the street is expecting. Do you think it's back to business, back to earnings, back to global cues, and the strong breadth that we've seen in the markets will continue going into the next few months?
I think it will, and this time the budget, I didn't even see the budget. So just to give you an indication of how much interest I had in the budget or what surprise it might bring, and obviously there was none. But on the other hand, actually things were better than I thought in the sense that the government was quite clear on the fiscal plan and to make sure that it's disciplined the fiscal deficit, looking at a 15-year outlook and stuff like that in the interviews that followed the budget. So overall, there was nothing bad, and it was an event which didn't threaten anything, but mostly may have reinforced people's views that the government is taking a disciplined stand on these things.
Let's talk about, the fact that you haven't watched it, I don't want to dwell more on this budget. But moving on, Jan is 1 month when we saw FPIs actually sell India more than any other market in Asia. As we stand at the start of Feb, that buying came in pretty aggressively on Friday itself. What do you think is going on with cuts of a rate cut now being pushed out? Does India risk assets still seem like a trade out there? I mean, you're in the US. What is the sense you're picking up? India is still attractive?
There is too much interest in India. The only issue they all have is, are we late? Is the valuation too high? And we remind them that if you look at 2-year returns of the Indian market, even in rupee terms, at the NSE 500 level, it is less than 14-15% per annum in rupee terms, which is lower or in line with our longer term 5-year and 10-year average. And also if you look at it in dollars, because in 22 the rupee depreciated 10%, that actually over 2 years the returns are cumulative around 20%. The whole idea being to say you are not late, but the interest is very high. I think January sales, some of it was related to people's disappointment with HDFC Bank, and that might have led to a few billion here or there. But overall interest is very high. When it converts, how it converts, I think is little bit the fund managers like us have to do a selling job to them about India, but mostly it will happen on its own, I guess.
Samir, morning. Tamanna here. Really liking your Desgul t-shirt. Morning our time, of course.
This Sunday night for me. Yes.
Yeah, no, fair enough. So you've not watched the budget, but it's whatever it was in terms of trepidation for the market is behind us. The elections are next, largely priced in. What is the other big factor, the next big factor for the markets, considering that corporate results have not been half bad on balance?
So actually, over time, I've realized that you don't need everyday new events. Bottom line is, if you look at last 5-year or 10-year or 15-year or 20-year or 25-year returns of the Indian market in dollar terms for the NSE 500, just convert to dollars, it'll come to around 12, 11, 13%, which means in rupee terms, some 14, 15, 16% kind range. And for that, it is more to do with earnings just continuing rather than saying an event broadly means you're trying to re-rate something. Obviously, the markets having done well, the ability for many sectors to re-rate is not there. You should get the earnings that are coming and then plus minus a few percent here or there. For example, last year, the MSCI India index went up some 21 or 22% and NSE 500 went up some 24-25%. In that, the earnings growth was 18%. So there was a 5-6% or a 3% higher PE at the end of the year compared to the start of the year. And that is the range in which you should have these events play out. The rest of it should be just earnings coming through. And that plus minus 12, 13, 15% is we'll still get it this year and going forward.
Your take on the earnings in large part, because we have a bulk of them now to gauge at least the health of corporate India. So IT, one could say, not as bad as expected. Banking was a bit of a curated seg. HDFC, etc. have given a bit of anxiety. What would be your take on Q3 overall?
So our take was that it was not overly exciting as a package, but it is still better than what many other markets have. And in general, for some of them which were bad, the expectation is that going forward will be good. And for those that were good, we are hoping that they will continue. So overall, it was not something which would shake you out of a position. But yes, it is not also that somebody can sell that the earnings are accelerating. That's why I also said, don't look at it like that. It should be within range. A range means the growth range, and you will get returns plus minus in that growth range, rather than saying, as you asked, is there an event? There is no real event in the short term. But the elections mostly are priced in, and I think the month after elections might be a negative month because of just too much hype having been built by that time. But it still won't be something which will change India's trajectory. Our relative position has improved a lot because it is difficult to find big countries with big GDP and markets growing at this rate. And secondly, and quite importantly, people's frustration with China. In the US last week, many investors said that they are broadly not even now allowed to invest. Allowed means that their boards or their committees or whatever basically say, don't bring China to us. They may not formally say it, but that is the way many guys were talking.
Samir, good morning. Niraj here. And guys, one of my memories of Samir Arora is a conversation that he did with us, wherein he told us eventually all fintechs will be NBFCs only, na? So no, we don't want that. Now, Samir, I want to come to you on that. There is a lot of talk about how the regulator has kind of killed the fintech business by virtue of what's happened in Paytm. Any views, any thoughts here on what happens to fintechs, what happens to Paytm, what happens to others?
So I don't think they have killed the fintechs. What they have said is that we are regulating the bank. We are not regulating the fintech. So let the fintech and the bank be at arm's length distance and not make it that the bank is an extension of the fintech. So my thinking is that Paytm will find in the next 20 days some other bank, I hope big bank, to play the role which their own bank was playing. So in some sense, they may lose some business or some revenue which would go to an outsider third-party bank rather than their own. But the fintech will continue. First of all, the market cap of Paytm is quite small now. They have $1 billion cash. By the way, we used to own 2% of Paytm before this, and now it has become 1% or 1.1%. We are going to stay with it, and we'll see over time what to do. But I think that, yes, there were mistakes made, but what to do? This is life. If you have 35 stocks, somebody somewhere will encounter some mishaps and they have to overcome them. And we have to only say best of luck to them.
No, Samir, but my overarching question was around whether you believe this whole fintech story, because earlier you had a different view, then you kind of realigned. Do you believe that's alive and kicking, or is there a difference there?
So my view was in the beginning when I said that there were 50 to 100 fintechs.
True.
So actually I said that most of them will go under, but obviously not 100% of them will go under. And in the end, there were 2 or 3 big survivors, including Paytm and maybe PhonePe and a few others. And others went to zero or got taken over, but basically at zero. But at this point of time, when the price of Paytm had fallen from 2,000 to some 500, we bought it first time at 520 rupees. And now it is whatever, 420, 440. So, but a lot of progress had been made. So I don't think they're killing the fintech. They are maybe giving a signal to the fintech that you have to still do the KYC properly and you have to do things as at least the parts that are regulated. Obviously, they're not killing it. As 40% share Paytm has, and this whole digitalization has been possible because of companies like Paytm and PhonePe and others. It can't be that you're suddenly going back. In fact, in every meeting last week, I was telling all these US guys that, Indian digitalization is ahead of US. We can do this, we can do that. And I don't think anybody is planning to kill that. It is now left to the market, but this regulatory part had to be dealt properly, which I guess Paytm didn't do, or their associate company or the associate bank did not do. For that, we are all paying a price.
The stock, as we speak in pre-open trade, Samir, is down another 10% at 439 rupees is what we have. I want to talk about a couple of stocks or sectors that you like. And top 20% of your holdings in the Helios FlexiCap Fund is HDFC, ICICI Bank and SBI. HDFC Bank, we've seen what's happened. We've also talked to, of course, your fund manager about his view on HDFC Bank, and I believe you still maintain and are still constructive on the bank. Well, SBI earnings on the face of it looked weak, but a deep dive indicates that things still looking up for SBI and iBank. Are you considering rejigging, rebalancing some of your allocations amongst these three banks?
No, it's not worth it because, first of all of them are quite similar for us. In all these funds that we have in 6, 7, 8%. So whether you put one down 2% or one up 2%, it won't change life. It's the overall concept of whether the banks and the private banks, and particularly HDFC Bank, where ICICI and SBI also haven't performed much last year. But HDFC Bank is in everybody's eyes and what to do with it. Broadly, we think that HDFC Bank has been overly penalized for visibly going into a sector or into a mortgage business which has lower margins, where you need to replace the funding. And whether you do it one quarter there or one quarter here, please understand that you are making in any normal year, say 15% return. So if something goes slightly wrong here or there, and you take away 20 and 25% from the price over time, that is like you're taking away 2 years of returns. I don't think that the problems or whatever was so bad. Because if you look at the other companies, look at the biggest consumer finance companies in India, they are also growing because of housing finance. Look at Bajaj Finance, basically growing because you have to go into mortgage finance. You do it in one shot or you do it over time. Bottom line is everybody has to converge to doing X% mortgage finance, X% consumer finance, X% subprime or microfinance lending, X% SME. There is no way that any one company has got the ability to grow in one area so much. But there is such a big difference in their valuations and in their price or in their performance because of just the way you present yourself. In that sense, HDFC Bank should have been a bit more aggressive. You look at the IT companies, quarter after quarter, they're disappointed on earnings, and quarter after quarter, they spun you a story that in future we will get some orders, which by definition will be lower margin because those are cost-cutting orders, and the public accepted it. Public is sheep. The analysts are sheep, so you have to guide them.
We'd have loved to chat with you longer, and I'd love to get your view on PSU stocks because they've been in focus, and your portfolio is about 4% on HPCL as well. But hopefully some other time. We are running very close to market opening. Good night and good luck with the week ahead. Well, Sameet, 2 minutes to go as we count down to market open. A quick one on your top trades for this morning.
See, as far as stock ideas are concerned, we have one buy and one sell. Buy would be on latent view, which has been consolidating of late. But this stock seems to be, in a position where it can come out of its consolidation phase. So we like latent view for a target of 528. So it's a short-term target. Stock can be placed around 459.80. Apart from this, Jubilant Foodwork has been the laggard since last month and a half. It has been continuously declining from its recent high. So we expect Jubilant Foodworks to continue this downward move. So as a short seller, one can keep a stop loss around 512, and we expect the stock sliding towards 474.
Okay, about a minute left. Sameet, Chavan, just one quick word on the stocks that have started off in the pre-open session, Tata Motors, UPL, etc. Quick 30 seconds. Is there a trade on any of those that you foresee based on the pre-open, based on the openings that they will likely have?
See, as far as UPL is concerned, this is continuously, declining, and it is likely to breach its important support of 520. So, the moment it stays below 520 for say 10 to 15 minutes, you could see the stock, hastening towards 500. So, overall, the trend has been quite negative, and one should avoid doing any kind of bottom fishing at current level. As far as the resistance level, 540, 545 can be seen as immediate hurdles, and below 520, this stock can head towards 5.
Okay, I think important words from Sameet Chavan, avoid bottom fishing. Sameet, please stay on because we'll want a lot of your views post-market open. It promises to be a morning which will be packed with news flow. The only question is, what do some of the individual broader end of the spectrum stocks do, particularly delivery? We haven't spoken about that at all. I'm sure we'll mark it one on the open as well. But here's the first rates, quite unlike what the implied open was suggesting. Or maybe hurtling towards that, who knows, but a flattish start for the large caps. At least pull up the bank Nifty, down about 0.43%. What is egging the index higher? We'll get to that in a moment. Just the mid caps and the small caps very quickly, about 1/3% for the mid caps, and the small cap index 0.5%. Okay, so the market breadth doesn't seem to be too bad. I'm interested in seeing what is helping the index. Can we pull up, aside of Tata Motors, what else is out there top draw? Let's get the heat map up. Tata Motors 6% higher. I think that probably single-handedly doing the trick. Because in terms of heavyweights, do I see something else? Not really in the top 10 gainers. IT maybe a bit because both TCS and Tech Mahindra are in the green, but actually almost even Stevens. So if Tata Motors is doing really well, followed by Sun Pharma and Tata Steel, what is not doing well is UPL, down about 4.5%, and the Bank Nifty's pegged down by SBI's result reaction, and Kotak, HDFC and ICICI Bank being down 0.5% in the red. So no big gyrations here on the index per se. You look at the index, it's evenly balanced with Tata Motors on one side, maybe a Sun Pharma, maybe an Eicher, but essentially an auto morning because M&M is also participating, and UPL on the downside, down 5%. Remember, Sameet Chavan said if it slips below 520, which I think it has now, then UPL kind of enters into dangerous territory on the downside. So be mindful of that. But the broader market is where all the action is.
Absolutely. It's interesting how the markets are responding very specifically to what the numbers look like. So rewarding Tata Motors at one end and punishing UPL on the other. I'm going to start with Paytm, and no prizes for guessing what's happening with the stock this morning. It has been residing on lower circuit for the last few sessions and is stuck there at 438. There doesn't seem to be any clear redemption for Paytm as far as investors are concerned, and there you have it. UPL, Niraj already covered, but yes, UPL also feeling some of the pain this morning. I'm going to go to Indigo. So again, profits have zoomed. It's a great quarter, fifth consecutive quarter of profits, but this one is particularly good. A clutch of reports also showing an upside, some insight on whether they start a business class segment as well, and that stock up 5% this morning. Z is the other one I'll talk about. So they don't really have any kind of positive news, but a setback to their opponent, at least in court. So Sony had moved SIAC for arbitration, and they were denied this. That is perhaps positive for Z at this point, at least momentarily. And Railtel is the other one I would look at. It's got a 125 crore order from Western Railways. Mild movement there. Just one more I want to pull up is Aurobindo Pharma. A lot of news flow, and the stock has already been hammered quite a bit. Those concerns continue after they have gone to the exchanges and clarified that yes, indeed, there have been 9 inspection reports from the US FDA at their Telangana unit. That stock about 4% down this morning. But the story seems to be all about auto this morning, Samina.
There's lots of big moves in auto, and Tata Motors is stealing the show this morning. And of course, Maruti as well. Those monthly numbers look pretty fantastic. We're sort of getting spoiled with Maruti. Month on month, they've been reporting good numbers. The stock pretty much putting that in the bag and has seen activity in the last couple of days. So profit taking on news is what we're getting. But Tamu is up 7% as we speak. A couple of other names that are worth a mention on back of news. So let's pull pull up delivery, the logistics majors reported profits at an operating level as well as at a net level for the December quarter. The stock is up 1.5%. The argument here is that they have seen a turnaround, so re-rating on the counter is likely. Numbers may or may not sustain. Usually quarter 3 is very strong. Whether or not this sustains going ahead is one thing you want to watch out for. Apart from that, DB Realty, if I can pull that one up too, they're considering restructuring, demerger of its hotel business when the board will meet on the 9th of February. On back of that, the counter trades with a gain of 5.5% in opening trade. Apart from that, couple of other movers. You've got UPL, that's down 5%, that Tamanna mentioned. Interglobe is up 5%. Gujarat Alkalis is down 4%. So big cut coming in on Gujarat Alkalis. Bank of India is down 8%. R Power is down 4%. Fine Organics is also down 3%. Paytm is at lower circuit. We've already highlighted that for you. VA Tech is up 5%, and DB Realty also looking quite sweet with a 5% up move. So all in all, reactions very stock specific, but yeah, the day belongs to Tata Motors, guys. 7% on a heavyweight after such a sharp run up last week.
And last year, Samina, the best performing index stock of 2023 was Tata Motors.
I'm very excited about this Hyundai news as well. So you're going to see this passenger vehicle excitement.
We can see that. That's thrice in the last 1 hour that she's mentioned.
Yeah, she's clearly very excited.
I am excited. But let's ask Sameet Chavan with us on take first on the indices and then Tata Motors.
See, Tamanna, as far as indices are concerned, we continue to remain a bit watchful, a bit cautious at high levels, and Nifty is likely to struggle around 21,950, 22,000 for the day. And the moment we see Nifty sliding below 21,800, we could see some put writers running for a shelter, and then probably 21,700, 650 levels can be retested. So again, the financial remains to be the weakest link, as we just alluded to in the opening remarks also. Now Bank Nifty is inching closer towards its important support of 45,500. So that cluster remains to be an important support for an intraday perspective. And once we see Bank Nifty sliding below 45,500, we could see it heading towards 44,200 probably in a day or two, and then a sub 45,000 territory can be retested.
Sameet, that of course is of Tata Motors that we are talking about. But just getting beyond that, how are you feeling about some of these PSU stocks? The rally was compelling last on Friday. This morning as well, some of those counters still looking pretty good. Any trades here? Anything that's staring at you this morning that you could initiate a fresh long on?
See, some of the OMC counters, that certainly looks appealing. So as far as oil marketing companies are concerned, we like IOC at current level. It is trading around 167, and there has been a dream run that the entire oil marketing company has seen in last couple of months. So minor dip would be a good buying opportunity, and there's a strong structure that we are observing on all time frame charts. So overall, we believe that any dip is likely to get bought into in those names, and probably at lower level you could see good buying interest coming in this oil marketing company. So as far as IOC is concerned, it has already challenged its previous highs, trading in an uncharted territory, and now it is clearly zooming towards 180.
Okay. I was just trying to look at what else is moving. So Inox Wind is up about 2%. I wonder if Suzlon has also gained in the session today, because we've seen how some of these renewable stories are active. 3% now for Inox Wind. Suzlon another 1.5%. And remember last week some of these renewable companies had done really well. Sameet, I know not too many of them in derivatives, but maybe look at the charts and talk about some of these which have had a really good run in the month of January, so to say.
See, as far as Suzlon is a stock is concerned, we know this counter for its long underperformance, and now if you see in last 6 to 7 months, the stock has picked up some momentum. Importantly, it is backed by robust volume. So at least for the near to medium term perspective, this stock is likely to do well. Wherein as far as levels are concerned, we can see 55 to 58 levels coming in probably next 3 to 4 weeks. So overall, the structure remains bullish. And this stock has been clearly, bucking the trend overall. If you see, there's a series of high rise, high lows can be witnessed in daily as well as weekly time frame chart. So overall, the stock has formed a good base around 35, 50 mark. And from here on, will not be surprised to see this stock heading towards 55, 58 levels.
Okay. What else is reacting to results? I think the one name so Bank of India apparently on results down about 8%. So that is to be kept in mind. But and Gujarat Alkali, this is down 4%. But I think the other stock of the morning has to be Interglobe Aviation. Great results, yields at all-time highs. They haven't enjoyed such yields in their lifetime, and they have gotten that. The load factor is about 85. So that's par for the course, and doesn't seem like the mood is dying considering the flights that we see every single time at the airport. 4% higher for Indigo currently. Sameet, it's not a stock that has not done well ahead of the results. Up about 4-5% ahead of the results also, and now gaining further. Now I'm just trying to understand, we know the results are good, but does it look like there is more juice left in Interglobe Aviation?
See, looks like there's an important technical development that has happened today itself. Stock has reached its previous highs with a breakaway gap. So that suggests that at least, for the day or next couple of days, 3100, 3150 seems to be a very strong support. And if this gap remains unfilled, for the day or tomorrow, then we could see the stock even making an attempt towards 3400, 3450. So overall, as far as today's development is concerned, if the gap remains unfilled, we could see this rally getting extended. 3400, 3450. These are the next levels to watch out for.
Right. Sameet, very quickly on Reliance Industries, a little bit of a flat day this morning, sub 3,000 on RIL. Would you buy it at these levels for the week?
I think one should wait. 29.20, 29.30 seems to be an immediate hurdle. So if the stock manages to surpass and stays above it, and then probably the stock can make an attempt towards 3,000. But as of now, it is in a kind of consolidation range, where it is on the higher side. 29.20 seems to be a resistance. Low side, there's a support around 20 to 80, 28.50. So we would rather wait for a breakout to happen from this important range.
Okay, Sameet, Chavan, we'll leave it at that. Thank you so much for your insights this morning, and have a great week ahead. Well, so that's the view on the trade thus far. The big news, of course, is the budget all the last few days, and in an exclusive interaction with NDTV Profit, the first, I might add, that Finance Minister Nirmala Sitharaman had with any private network. She spoke about fixing valuations of PSUs and not cutting down capex allocation. Listen in as we take a short break.
LIC का IPO घोषणा होने के कगार में जब हम थे, मुझे आश्चर्य लगा, मगर उसके बाद मैं रुकी नहीं, पूरे के पूरे ताकत लगा करके उसको सही भी किया। इंटरनल सिस्टम्स में LIC में बहुत सारे और गैप्स फिल करने का आवश्यकता था, अदरवाइज उसका टेक वैल्यूएशन करने में बहुत ही मुश्किल होता। पब्लिक सेक्टर अंडरटेकिंग्स पिछले लगातार 50 साल से या 91 से लीजिए, इंटरनली प्रोफेशनलिज्म ले आने के लिए बहुत कोशिश की, मगर ये प्रोफेशनलिज्म मार्केट ओरिएंटेशन के लिए इतना नहीं था। मार्केट ओरिएंटेशन के लिए जब नहीं, आपके वैल्यूएशन के इश्यूज में 100% प्रोफेशनलिज्म के साथ काम करने का शुरू भी नहीं हुआ, जो हमने LIC के IPO से पहले अच्छा सा शुरुआत की। वैसे ही PSU सब में भी आज वैल्यूएशन के लिए जितने भी सिस्टम्स में प्लेसमेंट होना है, वो सब करके उनका वैल्यूएशन को अधिक बना रहे हैं, जिससे आपका डिविडेंड, अच्छा क्वालिटी का डिविडेंड मिल रही है आज।